Good morning, FOMC day. It's Wednesday. So yesterday, quiet day in the markets for obvious reasons, as we anticipate the release of the Fed minutes, which should give us an idea. That's the market is looking for guidance on interest rates. When will they go up? How much will they go up? How often will the Fed raise? I think the consensus is something along the lines of next rate rise will be in March, and there could be 4 rate rises this year, I think. Anyway, what concerns me more is the state of the stock markets. So let's have a look. We're seeing a bit of a bounce back in the S&P. We went lower yesterday, and we seem to be seeing a bit more confidence this morning. We do have, in my opinion, quite strong resistance around 44.40, 44.50. If we were to continue higher, that would be my key resistance for the day. Yes, this big pin bar or this big hammer, whatever you want to call it, a relatively bullish candle, but no follow through the next day. So, and that was what I expected. I didn't think that we would go higher. So the fact that we went down didn't surprise me. And I think it kind of negates that candle a little bit. Okay, we are pushing back up to yesterday's high now. But I think there'll be this backwards and back and forth until the release of the minutes anyway, because obviously a lot of people want to go into that meeting with flat positions, or certainly a lot less risk on. So gold's been quite good to us. We have that very strong resistance level that I talked about in yesterday's video, which I'm going to show you on the daily chart. Why is that not doing what I want it to do? Anyway, okay. That's doing what I want it to do. Okay, so reaching the upper parameters of the range, I would say, with that trend line that goes all the way back to August of last year. So it's a very long, powerful trend line. Been tested many times, certainly held. Look how well it held last time. The bulls really did give it a go to try and get through there, but it didn't work. So shorts at that level kind of working at the moment in the low 1850s as we pull back to the mid 1840s. Again, don't know what's going to happen on the release of the Fed minutes, so be careful with any positions that you might have. I'm watching, YouTube videos and looking at financial news, and so many analysts or economists are saying that inflation are around 7% in the US, which I think is something like a 39-year high. As you know, if you've been following me for 6-9 months, I've been talking how inflation really had to go up. There's all sorts of reasons for that. We were in an artificially low interest rate environment from what I understand, brought on by China in particular becoming the manufacturing capital of the world, with particularly low cost base, low wages, and that wasn't going to last forever. And now, obviously, with QE going absolutely mental, the only reason that the Fed could pump all that money into the system, well, they did it because at any sign of weakness or any sign of a weak stock market, they just panicked and threw money at it, which I don't think is the right thing to do. But anyway, we never cleaned the system. And they only could do that because of this low inflationary environment, which is actually quite abnormal from what I understand. And again, brought on by Asia, bringing so many workers to the world economy. So, those factors are diminishing. And I just think that inflation is here to stay. I just think that the Fed have overdone it. I don't really think inflation will drift back to 2%. I must admit, I didn't think it'd be at 7% at this stage. I thought we might get to 3, 4, 5, but 6, 7, who knows? The jump from 7 to 8 to 9, it's not that much now, is it? Really? We could get to 10, and then you're talking about double-digit inflation. That's a pretty scary prospect. And the Fed, by many people's accounts, are way behind the curve. And if they don't get control of this inflation soon, it starts to run away. It's going to be a massive problem. It'll be a huge problem for the stock market because interest rates will have to go up way further than they would have otherwise had to have done. I think they're making a horrible mistake, which could certainly impact financial markets quite badly. Anyway, I'm rambling on. That's not something that's going to affect the markets today. That's just my own personal view. We'll see what the Fed decides to do, and we'll see how it affects the markets. I still have a negative bias for the stocks, even though we're seeing a bit of strength today. I just don't think that we're seeing the bounce back that we would have done in a proper bull market, where buyers come in and then they just aggressively take the market up very, very quickly. We've had one bounce off the low where the market closed slightly up, and then the next day we lost most of those gains. Okay, yes, we're getting them back today, but I think we're probably in a consolidation phase of the down move rather than a base building exercise whereby this market will form a nice floor and then continue on its merry way up. Personally, I don't think that's happening at the moment. I will either be proved right or wrong, but obviously we will probably get a pretty violent reaction out of the FOMC meeting this afternoon when they release the minutes, and then we can review that tomorrow morning. If you've got a position over it, be careful, because obviously the moves could be violent. We just don't know what's going to come out of the FOMC, and it is a pure gamble. Good luck today. Talk to you tomorrow.